Ladies and gentlemen, could I have your attention? Take your seats. Okay, so we are, everyone is looking at their phones, so I'll look at those of you who are not doing that. We are about to kick off a panel discussion, which I hope will be more a conversation than a series of set pieces. I'm Susan Rice. I'll be the moderator for the discussion. Let me quickly introduce my fellow panelists. So we have Yannick, Jung, who is head of global banking for BNP Paribas. And then we have Philippe Oddo, who is general partner at Oddo BFH. And finally, we have Alex van der Mühlen, who is CEO for Asia Pacific, EMEA, and Germany, and a member of the management board of Deutsche Bank. So we've been having an interesting kind of European discussion in the green room, but that's not what today is about. So our panel is called Can Banking Be Ethical? And just to manage expectations, I'm not and we're not ethicists, philosophers, academics. We're not going to have a high-level philosophical discussion. So I'm a banker, I'm a practitioner, and I've run a bank as CEO, I've been non-executive, I've been a non-executive with a central bank and done many other things, and my colleagues are all running huge pieces of the banking and financial world just now. I sit here and I just want to say a quick word about why I'm involved in this. I wear a number of hats, but one of them is as chair of the global steering board of an organization called GEFI, the Global Ethical Finance Initiative. Started in Edinburgh some years ago, where there's a long history of discourse across academic institutions and financial institutions, of which there are many in a small country, and it's a country that actually invented and created some of the early forms of banking that spread around the world hundreds of years ago. What we do is convene countries, institutions in countries around the world to consider how they can engage and bring to life what's really a $40 trillion market in responsible banking. So my colleague Omar Sheikh is here. After the event, you can find out more about us. But that is part of the focus for me on ethical banking. So let me ask the question for this session. Can banking be ethical? Or actually, I might ask it slightly differently. Can banking be ethical? And does it really matter if the numbers work? Does it really matter? And if it does matter, how do we make sure that it actually happens? I'm going to give you 2 data points, and then we'll launch in. The first data point is, I would say it probably does matter to at least parts of the industry, because in a report published fairly recently, a survey of M&A activity around the world, or in many countries anyway, the report concluded that ESG-focused companies enjoy premium valuations over traditional ones. Now, I didn't go into their methodology. As with most things, you can come out with different conclusions, but this was published by a big-name firm. In a very separate exercise, a survey done of consumers, and GEFI was one of the partners in doing this survey, in countries around the world, looked at what mattered to them in the way of banking and in their lives, in fact. And 90% of the respondees knew what the UN's SDG, the Sustainable Development Goals, are, and they mattered, and they went into which ones mattered most to them. And this was true of consumers, not just in the global north, but in the global south as well. And that's a nexus that I like to think about a lot. So I'll start off, answer that middle question. I think it matters. So let's then go back to the question. And I want to consider it from 3 directions, starting from what do we need structurally in the industry to make sure we're operating ethically? How do we face out of the industry and make sure that we're achieving For instance, financial inclusion, which is an ethical goal. And finally, how do we ensure that the way we deliver within our institutions, our people, that they actually know what it means to make decisions that are ethical, as well as following the million regulations that everybody has and adding the numbers up. How do we make sure it works from within? So, to get us going, turn to my colleagues now. Let me start with a question, which is a short question, so I guess I'm looking for a short answer to start with, and then you can expand your responses along the way. Each of you, what do you think? So, Alex, I'll start with you because you're at the end and come back to Yannick. What do you think of when you think about ethical banking? What comes into your mind?
Well, I would split first of all the word ethical from banking and argue that ethical means following your moral compass, and then you're translating into the respective area, business, domain, in this case banking. So doing what's right, not just what is allowed with respect to banking activities would be my translation.
Philippe?
Well, in a few words, I will begin with ethical. What ethic means. I'm not going to open the big book.
But you're French, so
I see you very worried, don't worry.
No.
But maybe in a very short word, I would say to live well together.
Oh, that's good.
If you are able to live well together, I think you're on a good path about ethical. And I would add one thing is to live well together on the long term.
Yeah.
And if you do that, I think you are ethical. And I don't see any reason why banking, where you have to attract talented people, to keep them, to attract clients and to keep them, and to be concerned or even very interested about what your clients want to do.
Yeah.
And then you must be ethical.
Yeah.
You have no choice. In a few words.
Very good.
Well, I can only echo what Philippe was saying. Back to your question about can banking be ethical? I think it must be ethical. It's not a matter of choice.
Yeah.
It's actually an imperative because what lies at the core of banking at the end of the day, once you set aside the capital, once you set aside the people, once you set aside the services we're rendering, is trust. You cannot have a sound, efficient, reliable banking system if you do not have trust. And to have trust, you need to make sure that the different financial participants are acting in an ethical way.
Oh,
I hope you can hear us because it's kind of difficult for one another to hear ourselves on the stage. But if you hear us in the room, it's fine.
Okay, very good. So that's really good, and you did come up with some different approaches to that, which is helpful. So let me start with a kind of a big question, which is if we agree that, first of all, banking matters to economies and to people, and it's there to make the economies grow and prosper and to help individuals grow and prosper. And we have a better world, and we all do better if we can do that. So assume there's value in banking beyond the financial value. How can banks adopt ethical investment policies or integrate ESG factors into risk models? Or are there ESG frameworks or indeed impact metrics which are being worked on in recent years, which can help banks shift capital flows towards maybe ethical climate solutions, just to look at one area of sustainability, but also shifted away from destructive activities. So, Yannick, do you want to kick off?
Sure. So if you think of the way banks are actually integrating ESG into their thought process and into their decision-making process, they're actually doing this at lots of different ways. First, they're looking at, they're spending time on their own people, and I know we'll deal with that later, but it's very important. The training, the awareness, ensuring that you have a robust code of conduct that everybody can abide to, ensuring also that you have the proper escalation framework to ensure that anybody that disagrees, that sees something wrong happening, has got the means to then ring the alarm. You know, we call it whistleblowing. So that's number one, have a proper people management framework. The second aspect is around the decision-making process. So the way we've approached it at BNP Paribas is we've decided, we've put together a framework whereby every single one of our corporate clients go through an ESG assessment phase. And this is about measuring what is the impact on the environment, the impact on climate change, the impact also on the communities and the labor market where our clients are operating. And so no credit decision can take place.
Yeah.
No client can actually be welcomed, onboarded as a customer when they're a corporate without that ESG assessment having taken place. So these are two like real life examples. But it takes a lot of work. You know, you need data points, you need IT, you also need training, again, back to my earlier point.
And was that development, you didn't wake up one morning and it was all in place, was that prompted or led by the executives, by the board, or advisors?
It took us 5 years. It was born out of our CEO resolve and vision that we needed to be more forward-looking and be at the forefront of this ESG evolution. Yeah. That we needed to take a hard look at our client franchise. That we no longer could afford not to be asking questions, right?
Yeah.
And this assessment is born out from conversations we're having with clients around their own sustainability plans, their own energy transition strategies, and this is an intense and a heated at times debate that we're having with them.
Okay, that's very useful. Philippe, any experience you've had in terms of working sort of policies or approaches into your organization that focus on outcomes that are ethical, let's say, in a sustainable world?
Yeah, for sure. Well, first of all, I would say we have to implement the regulation, which is a duty, it's a must. We invest a lot of money in terms of reporting and so on to do that. But obviously, we see the subject on different levels, the clients, the organizations, and ourselves. Maybe I will have the opportunity to come back on those 3 points. But when it comes to clients, we have two aspects. We have the criteria we have to implement. And for example, because we are a Franco-German group, within the group, they have a different approach. For example, about weapons. The German will consider most of the time that weapons are not ethical. And the French are going to consider weapons as ethical. So at least within the group, it's an interesting discussion about this kind of topic. At the end of the day, what is important is what the clients want.
Absolutely.
And what we have to do also is to invest in research to take into account the climate change. Which kind of impact the climate change is going to have on companies who are investing in, which is well above the subject of ESG criteria, because it is directly in the interest of the clients to take into account, as an example, climate change or corporate governance. If a company doesn't have a good corporate governance, it is in the interest of the clients to invest in those companies.
Oh, that's very good. Let me just go back to your friendly rivalry between the French and the German parts of your organization. You said difficult, challenging conversations. At what level did you have them? Did all your people get involved, or?
If you want to go deeper in that topic, when we bought 3 companies in Germany, 2015 and 16. Then we realized that there are cultural differences. We have to know those cultural differences. We have to understand and to respect them. And the Germans will stay German, and the French will stay French. But what is very interesting is to help them and to help all of us to understand the difference. And it brings a very interesting dialogue, many opportunity to smile together, to make joke and fun on the vision of the others because they are French or because they are Germans. But at the end, we improve the quality of what we do, and I think we have really improved the general quality of the approach of the group.
So you're making me think a thought that's from left field, as you say, if you're from America, which is having been a female in banking for a long time. I mean, I was most of my career the only woman around all sorts of tables, and what you just said really matters. Is as long as you can say, I come at this differently, different background, different experience, different culture, and you put that into the conversation, that's what works. So it's not just national, it's about people as well. So thank you for that. Alex, what about this business of policies focus, measuring impact? How much do you do that in your organization?
So it's a lot of work, as the two colleagues already noted, right? It's kind of the new bar for the industry. I mean, if you go back, the financial industry, as other industries, they were obliged to operate within what was legally permissible, what was regulatory and institutionally permissible, meaning, what from a reputational risk perspective was an organization willing to take. And the highest bar thereof was kind of your bar. And now you bring in, I'm not going ethical, but talk ESG for a moment, because that certainly corresponds very much with how we would look at ethical behavior nowadays. And that in many cases sets the higher bar. Now, interestingly, and to Philippe's earlier point, you could look at different jurisdictions with different risk appetites and certainly different legal environments that you operate in. The moment you go out with an ESG standard, just for yourself, that sets a bar that you need to comply with on a global basis. You cannot arbitrage yourself in one jurisdiction versus the other, right? So what that means for us, and very similar to the colleagues at BNP, Deutsche Bank years ago came out with a very clear guidance and a commitment towards that. We started working through our own ESG taxonomy, which very highly correlates with the EU taxonomy nowadays. That is, argued to be the highest standard at this point in time of all jurisdictional taxonomies in that space. But it does create an issue looking macroeconomically as well. For as long as there's no harmonization across continents, across countries, we all still operate with somewhat separate bars. For large banks, it's easier to accommodate, and it's a must-have anyway because of our capital market access, pressure rightly being put upon us to comply with this. The bigger issue is for smaller and more local financial institutions, because this additional workload and complexity, the data gathering, the monitoring thereof that is being put upon them is a task. And it's expensive and it's complex. And what it leads to, and the risk is, that a lot of these smaller institutions operate in a black and white model. If in doubt, you can't risk of being non-ESG compliant, and consequently you stay away from something. And it does trigger another issue, because we know that we need to help the industries, the economy to transition. And this debate is not how to get from green to greener, but to get from brown to green. If too many institutions step away too early, we all have an issue. And this is why finding a taxonomy, a rule setting that everyone can deal with, that everybody understands, and ideally is simple, will be beneficial for the economies overall.
Yeah, thank you. And taxonomies, of course, in this space are all being developed in different countries, and debates about should there be one across the world doesn't really seem to be working that way. They need to be more particular to their sort of regions and so forth. Let me just take this conversation a bit further then and ask specifically about regulation. So anytime there's a problem in banking or finance, the regulators come in, do a pretty good job in my part of the world, and create some new regulation, and that creates complexity as well. when we're looking at the utilization, the adoption of, for instance, digital finance tools and AI, what we're all playing with now and moving to more and more, what's the role of the regulator here? Can they back off a little bit and let us work out what's working before they come in and regulate it ahead of time? Forgive me if you're all regulators. Bank of England, I understand it from that perspective as well. But Philippe, you're looking at me. What do you think?
Regulation, we have invented many regulators, and what do regulators? They make regulations. That's their job. And in Europe, I'm a fan of Europe, you can imagine, but Europe is very strong in regulation. We have to pay attention that probably in our sector, we are investing much too much in IT for regulation.
Yeah.
Because I don't know which kind of proportion of your new investment change the bank proportion is related to regulation. We have to pay attention to the competitiveness of the sector in the future if we invest a too big proportion in IT in regulation. So then AI is going to play a role. And I think we are really at the beginning of the process in the banking. Yeah. In the banking industry, where I personally see AI is a lot of in asset management, hedge funds, quantitative management, but it's going to go in many areas like compliance, like CRM approach, experience, client experience, general organization of banking. So I think it's going to be highly related to the property of the name, of the identity of the people. I'm sure we're going to deep dive there, but it's probably too early to see what AI is going to achieve when it's going to come to new regulation. Let us take time. Let us take time for new regulation in AI.
Okay, probably wise advice to all you regulators. Yannick, do you want to say anything further about just regulation and its ability to prompt or support ethical banking as opposed to financially sound banking?
You know, at the end of the day, it's back to my point about trust. The reason why we have supervisors is that banking is inherently risky. You create financial systemic risk. So it's only very natural that we have supervisors that are keeping an eye on what it is we do, that they set standards, they set norms, and that those standards and the bars are raised at regular intervals. And to comply with those set of guidelines and regulations is actually our license to operate. So it's the way we create the safety and the trust in the financial system. Now, what I regret when it comes to a point that was made by Philippe earlier, and Alex alluded to that as well, is when it comes to the whole debate around the energy transition. What I regret nowadays, and I'm leading a global banking operations, we have a presence in 80 countries, we are dealing with a lot of regulators around the world, and the conversation we're having with them on that specific issue is very centered on they want us to reduce the amount of support we provide to the brown industry. And I think they should be much more interested in and creating the incentives and the framework to facilitate the support to the low carbon economy, to support the production of low carbon energy, to create the framework that helps decarbonize the industrial processes of our corporate client base as they manufacture things. And this is what the world needs right now. The world needs much more investment into low carbon energy sources. That was mentioned this morning on the panel. We're only spending 1.4 trillion a year. We actually need to run on a cruising altitude at 4 to 5 trillion a year. So we are far off from what's the optimal target there. And this is what should be of concern to the regulators, much more than how is our balance sheet going to look like in 10 years, assuming we are in a disaster scenario and everything goes wrong and the energy transition doesn't happen. I think this is much more important as a debate.
So that's really, really good. I've spent some time setting up an economic regulator in Scotland, and I know enough about forecasting to know forecasts are always wrong. So, you know, a little bit hard to anchor that.
If you need to run stress tests today
Yeah.
that are based on what might happen in 30 years, if nothing happens, if no change happens,
Yeah.
then of course the result is going to be abyssal, right? What else can you expect?
Yeah. No, thank you for that. Alex, you've got a brief in your day job that takes you around large parts of the world. I mentioned financial inclusion before, so we've got, $370 trillion industry in banking, and yet not everybody is banked or can access banking or is comfortable enough to access the way we offer banking. But there are the unbanked, sometimes in large populations and countries, but actually having worked in Manhattan for a number of years, in highly developed cities, you have pockets of poverty and people who simply won't bank. They go about their lives differently. Emerging tech, sustainable imperatives, they're very much on all of our agendas. Can we use any of those things to reach out to and encourage and also provide access to banking to some of these populations?
So I think digitization is a wonderful tool actually for financial inclusion, right? And we have a lot of anecdotal evidence that we collected more recently, and Corona was a big driver of that. You look at what happened in India as an example over the last 3 years, where a significant proportion of the population for the first time ever got access to the financial industry through apps, through mobile phones, rather than traditional usage of branches. And you know, still at this point in time, we almost have 2 billion people on the planet with no access to the banking industry. Cash or whatever type of wealth they have is held under the mattress. Certainly that is not a healthy and a sustainable format going forward. Technology does definitely help. It does not even require the digital deployment of central bank money necessarily, even for the banking industry and financial industry more broadly. These tools will help. There is some work to be done still, because we know not everybody operating an app or providing an online tool is necessarily, you know, doing good or regulated or controlled. For that, there are certain steps needed. And to the earlier question you asked, Susan, around what regulatory and governmental steps could be needed, forming an e-identity, a government-controlled electronic identity, will help to bring a larger proportion into the system, because, you know, KYC processes that banks naturally need to go through will be way more easily established if there is a central body, authority, that handles those items, and that can bring hundreds of millions of additional people into a safe harbor.
No, I think that's very good, and an important point that you've just made. Let me bring it back around to your individual institutions. So banking, however digitized they are, however much AI infiltrates what we do and our decisions and so forth, it's delivered by people. And you know, you all have people. I had people when I was running a bank. We train them. We put our values up on the wall and all of that. But how do we make sure? So purpose is a word that's rolling off everybody's tongues now, particularly in financial services. And I worry that everyone says, oh yes, here's our purpose, and we'll get on with it. How do you make sure that your people can actually relate their day-to-day job to what your organization is about? Because you all at very senior levels are talking constantly about the client, about what's out there, which is what you should be doing. How do you make sure your people do that?
Maybe I would like
Philippe.
to pick up because we have something in common, a common story with BNP Paribas. I've been the first investor in a fintech in France called Compte Nickel. And it was for people who were forbidden to have an account. And in 5 minutes through les bureaux de tabac, they could have and open an account in a bank, Compte Nickel. and this opportunity, this thing has grown quite a lot, and they have found a new shareholder with BNP Paribas, and who is managing the thing very well, and the same spirit. And I don't know, because there are 3 million?
3.6 at the latest count in 4 different countries, France, Spain, Portugal, and Belgium. And we will be starting in Germany, I think, end of the first quarter.
So at least we have been, if I may say together, been able to
Absolutely.
address this point for. But I would like to address another point, is technology brings the opportunity for the ladies to have an account, and even more in poor country. You know, how many times the ladies cannot keep their money for themselves, even though they have made the money and gained the money themselves.
Yeah.
But thanks to technology, in emerging countries, they are going to be more and more able to be in charge and afford their own life, which is going to play a key role on the future of the world, because the mothers are the ones who are educating the kids.
Yeah.
And if they are able to grow more, is a potential of more education for the rest of the world, I think.
And Suzanne, to your question on, on our own people, how they relate, how they participate in this entire debate there, they take notice. You know, when our firm is, and Oddo before that was investing into this new account for the low wages, the low income, unemployed people, they are happy about that. When our bank is super active in microfinance, we're supporting over 80,000 microfinance organizations worldwide. It's 1.5 billion euros of lending to over 3 million people, 80% of which are women. They derive a lot of pride from that. So the actions, the deeds, are actually probably as important as the management narrative when it comes to our own people, when it comes to our employees.
So I would add something to that. One of the companies I chair is a big water company, water infrastructure, and I can go out and speak to almost anyone there and say, what do you do in a water treatment work, hundreds of miles away? And they almost always say, well, I do this job every day, and the point of it is to create clean, safe, plentiful supplies of water. They tie that, what they're doing, they know what they're doing relates to that.
This is important.
It's much harder in financial services because we deal with the surrogate of numbers, which are representations of reality. They are not reality. And so it's really hard to
I would respectfully disagree, because at the end of the day, what my people do every day,
yeah.
they are creating jobs, they're creating projects, they're helping clients manage risks, they're helping them access to capital, they're helping them grow, and it's and they're proud of that.
Yeah.
And they're helping with the energy transition every day.
Yeah. Good. We're coming close. I'm going to ask just a final closing question. Alex, anything you want to add to this discussion? No? Okay, very good. Well, then I will turn to you just with a closing question, which is, what piece of advice would you give to any firm that wants to keep front and center in their organization this notion of ethical banking, that banking is and must be ethical? What do you say to a firm?
Well, I think it comes back to the moral compass that you need to establish. There is no alternative, right? And that's a managerial task that comes right from the top and needs to cascade through the entire organization. There's no alternative, there's no plan B. I think moral behavior, ethical behavior is important. Again, ethical does not equate ESG-esque necessarily. It can be a subcomponent thereof, but it comes with its own complexity. What I will say on ESG and the establishment that is happening in the financial industry at the moment, I think there's a necessity to move from stick to carrot, meaning that, rather than going black or white and filtering your customers as to are they in line or are they not in sync with my own risk appetite and the way I want to portray myself to the outside world from the perspective of ESG, to put more emphasis on the transition task, where with smart structuring work, the financial industry can help and needs to help for customers, governments, whoever it might be, to go on the path of transition. It can be a very commercial task, by the way, and I don't think that makes it unethical thereby. But I think that's really where the financial industry holistically needs to challenge itself to put more emphasis on that path.
So the commercial point is really important. This is not an either or at all. I've helped found several impact investing entities, and the whole point is you do it and you make a profit and you keep running, but you have an impact as well. So really good point. What piece of advice would you give, Philippe?
Some very pragmatic things. First of all,
in 6 seconds, we were going to go a minute
first
over.
of all, do what you understand. Propose to your clients what you have understood yourself, and to be sure that they have understood what you propose them to do, which is very important, because then you begin to have a trustful relationship with your clients. It's all about education. Yes, we want to propose things which are good and sophisticated for sophisticated clients, but at the same time, we have to teach them. What we propose, at least, is to be linked to the bank on the long run, and that's the reason why we have proposed to everybody to become a shareholder of the group with a long-term view, which is very important. Yes, we will tell you, you have to know the regulation, you have to be compliant, you have to many things. It's a duty. But what is even more important is to be always in the shoes of your clients.
No, that's very powerful thoughts. Yannick?
In the interest of time, I will keep it very short. So the one single piece of advice I would give is just walk the talk. Set the tone from the top, and then do it.
Thank you very much. And I will close simply by saying that an awful lot of this is down to the culture in your organizations, which has very little to do with the values that the chief executive has put up in a plaque on the wall. People think culture is about how you behave when no one is looking, but actually culture is about how you behave when everyone is looking in a group, in your organization. And so my piece of advice would be to, in your organization, make sure that you have a handle on the culture and that people really are behaving and making decisions and judgments that you want. Can I thank you very much for your attention and my wonderful colleagues
Thank you,
here.
Susan.
Thank you.